Welcome to Accelerate Your Wealth, a podcast by Rebecca Robertson, founder and director of Evolution Financial Planning. This series, we're focusing on female financial independence, looking towards a stronger financial future. Be sure to let us know your thoughts on the show, and please do connect with us on Facebook, LinkedIn or Instagram, or head over to www.rebeccarobertson.co.uk.
Well, today I have a guest that is here for her love of education and helping people. So Manika Premsingh, originally from India, has a master's in economics and a BA in economics, and has studied at the Indian School of Business. She had worked nearly for 4 years as a writer, an investment writer for the Motley Fool. And has worked for multiple clients as a public speaker and an economist and sector analyst, and currently an investment content specialist for Circa 5000. So she's going to be talking to us today about how long is this cost of living crisis going to last. And we're going to be talking about all things the economy, the cost of living, and should we be optimistic or pessimistic about that future? So I'm looking forward to chatting to Manika. Welcome, and thank you so much for your time today. Now, make sure I'm pronouncing this correctly because I'm terrible at pronouncing names. Is it Manika?
It's Manika, yes.
Manika, I got it right. Amazing.
Yes, you did.
I always try to make a point of making sure I pronounce names correctly because I am quite terrible at it.
Thank you.
So tell us a little bit about yourself. Obviously, you're here for really as a favour for me, which is such a lovely thing for you to come and do, to help share knowledge with our listeners around what is going on in the economy at the moment. And I think it's such an important subject that people only really resonate with when it's really hitting the pockets, and it's affecting everybody right now. But I think it's such a relevant conversation when it comes to financial planning and the bigger picture, that if for people to understand, well, how long is it going to last and why we're here? But before we get into all of that, tell me a little bit about something about yourself that maybe a random LinkedIn person that's contacted you.
Right.
Tell me a little bit about yourself, and I wouldn't know from LinkedIn.
So first, thank you so much for having me here.
Oh no, I really appreciate it.
The real reason I'm really glad to be here is because I believe in creating greater economic equality for women, and you are doing a great job in that in particular.
Thank you so much.
And that actually ties in with what might be somewhat interesting about me, that I'm passionate about women's causes. And I would like to see nothing more than to see women succeed, especially considering the country that I come from, which is India, where some of the numbers, some of the social statistics, some of the population statistics are not favorable towards women. And we have a long way to go, both in the developed world and in emerging economies and in emerging countries. Let's put it like that.
Yeah.
And anything that I as a woman can do, who has had opportunities and seen what an independent life can bring, I would like anything to do to help.
Amazing. I love that. Was it a big transition for you then when you moved, because you studied in India, right?
Yes.
So when you came to England, was it a big culture shock for you?
Well, because of India's past history, it actually wasn't.
Okay.
Because there's a lot of familiarity, including being well versed with the English language.
Sure.
Things that are bad in the history can be good in the present.
Right. Yeah, exactly. I know exactly what you're saying. Right.
Yes.
From a cultural perspective, just on the equality of women, was it better in India than it obviously maybe when you was much younger? Has it changed over the years, do you think?
Oh yeah, of course, it has definitely changed. But I also have had the privilege to be born in a big metropolitan city where the
Right.
culture tends to be a little more advanced,
Yeah.
and be born to parents who were enlightened enough to not discriminate between boys and girls, which is still a big problem, right? Women's
Wow.
educational attainment can
Yeah.
get challenged because boys' attainment is more important, or is considered more
It's
important.
crazy. I just still find that mentality crazy, even in this day and age. But I know it obviously still happens.
It still exists, yes.
I mean, not to get involved with the Taliban, but I was recently, they've just stopped girls up to a certain age, secondary school girls, going for secondary school education. And these girls are devastated because they want to be doctors, they want to be nurses, they want to have a profession. They don't want to just, be, mothers and give birth. They want to do more.
Yes.
So yeah, I still see that culture there, for example, in the extreme example. And it just blows my mind that that's still going on in this day and age. Really does.
Yes, but I think we are making progress, and the more we put ourselves out there, the
Yeah.
more progress can be made.
Totally.
So thank you so much once again.
No, I really appreciate it. So let's get into this juicy subject of the cost of living. So let's start with not necessarily how long it's going to be around for. Let's just start with how has this happened? Why are we where we are?
Right. So the cost of living crisis is associated with what we call inflation. Now, what is inflation? That is a number that gets thrown around a lot these days. What is inflation? Inflation is nothing but the change in prices over time. So when prices, typically prices increase either every single month, every single quarter, which is 3 months, or every single year. And the level of change in these prices is called inflation. Now, there might be times when prices actually decline, and that is called deflation. But that is relatively rare. Typically, we are focusing on inflation. Now, as far as inflation is concerned, the point to remember is that there is always some inflation in the economy. And that is for good reason, because a small price increase means that more companies will want to produce goods and services, more people can get employed. There is more incentive to produce essentially and keep the economy growing, which might not exist if there is no inflation. Now, the problem arises when inflation rises so fast that people are not able to afford even the basic goods and services, which we are seeing right now. Like if we look at our energy bills, I know from my own experience that it has risen significantly over the past couple of months or so. If price, and these are not expenses that you can do away with. I mean, it's not like a drink in the pub that I can just not have, right? If I wanted to. This is something that I need for my day-to-day existence. Mm-hmm. So if the prices are rising, then that means I have to cut down on my expenses in other areas of my life, right?
So when it comes to and gas and electric particularly,
yes.
Obviously this is down to oil prices being more expensive primarily.
Yes.
But the oil companies are reporting massive profits.
Yes.
And I saw something the other day where it was, I don't know how true this was, but this guy filled up a £100 tank of petrol in his car.
Right.
And majority of the money, like only, I don't know, I think it was like £7 or £8 went to the forecourt of the owner of that particular petrol station.
Right.
And about £20-30 went in actually the cost of the diesel itself, and the rest of it was on taxes. So we're seeing that they're not cutting taxes around petrol prices. The large corporates aren't passing over their profits and reducing the cost of living for people. It feels like a bit of a forced economy rather than just because of inflation.
Right.
Am I missing something?
Right. So I don't know the details of this particular example and the breakup of the
Yeah, no,
cost.
sure. It's quite complex, right? And that's part of the
Right.
problem. There's many elements to it.
Right. But I do what I will say is energy prices have risen significantly because oil prices have been on the rise, not just this year, but since a while now, over a year now, since we started seeing the pandemic, after the pandemic when the lockdowns were over. Since then, we have been seeing a rise in oil prices. Now, one of the problems has been why they have been so high is that OPEC, which is the oil exporting countries organization, its production has remained below pre-pandemic levels. Now, this is just supply and demand. After the lockdowns, they were not expecting demand to increase as much as it did, and the supply was not as much. So prices increased. So that has been one of the biggest reasons. But oil prices is just one thing. The bigger problem is the second round effects of oil prices. So by second round effects, I mean that oil prices are actually a cost for many companies. So for instance, if I get a Tesco grocery delivery, which I do often, they will have to pay something for fueling their own trucks. So that is a cost in itself.
Yeah.
They can start charging higher on the margin for that. And that is exactly what happens every time we get a delivery or every time goods are delivered to the stores. There is a cost element relating to energy involved there. And of course, to run offices and warehouses and retail shops, you need you need that.
That's so very true. My little local shop, the family that run it are absolutely lovely, and they were saying that their electric bill, because obviously they have fridges and things in the shop, in the summer usually goes down. Obviously it hasn't this year. Normally it's about £700 a month, which I think is quite a lot still for a little shop.
Yes.
And it's closer to 2,000 just for this little local shop.
Right. Yeah. So that is a reflection of the level of costs that are increasing. Now, if we add to this the fact that people already have less money to pay now, they will buy less from the shop. So it gets squeezed from both ends. Not only are its costs higher, its revenues are potentially either growing lesser or they are actually lesser. Right? Which means that its own income is declining as well.
So taking it back a step for a second, what has caused this fast pace of inflation? So it was increasing anyway, but why has it gone so high as it is now?
Right. So inflation, typically what drives price increases? Let me get to the very basics. That is just a difference between supply and demand. When demand is significantly higher than supply, then there is inflation. The more the demand and the less the supply, the higher is going to be the inflation level. Right. Now, there are a few reasons besides energy that have resulted in this. One of them is the fact that there have been supply chain challenges. Right? Some of them are stemming from China. For instance, China and its zero COVID policy till very recently has meant that Chinese supply chains have been disrupted. And China is actually the factory for the world now. Especially in many parts of the Western world, they are very services-oriented economies, while China is very, very manufacturing driven, and it exports a lot of production takes place. So if at the point of production, there is less delivery, then we have a serious challenge. And now on top of that, this year, we had the war between Russia and Ukraine. Between the two of them, the countries export 30%, if I'm not wrong, of the world's wheat.
That's right. Ukraine does, which is amazing. It's crazy, right?
Right. And of course, Russia also is an energy biggie. And if we shun Russia's energy supplies, that also increases energy prices. Now, also again, now wheat is used to to produce many other foods, right? Your processed foods, your bakery products. Those prices will also start rising. So between energy and food, we have seen a serious rise in inflation because there have been blocks on the supply side.
So it's a combination really of the knock-on effect of COVID and the pandemic, alongside what's happened with Russia and Ukraine. It's a combination of the two. Really bad timing, or in Putin's probably view, very good timing, possibly. So we don't know how long this is going to go on for. So officially, tell me if I'm wrong here. So for us to be in a recession, we need 2 consecutive quarters of high inflation, and we have had that so far as of the 1st of July. So are we officially in a recession as of now?
Well, a recession, the latest quarterly numbers for the Jan to March 2022 period, they show a 0.7% increase in growth in the UK economy.
Right.
Actually does not sound all that bad. But what we have, when we look at the more granular monthly data, what we find is that for the last couple of months, the economy, which is measured by the GDP, is that something that you'd like me to explain?
Yes, please.
Okay, so the GDP is nothing but the income generated. Very simply put, the income generated by everybody who's participating in the economy. So, for instance, you generate an income, I generate an income. If we add up all these incomes, including incomes of companies, which is essentially their profits, then we get the GDP. This is a very, very simplified way of putting it, but I think it puts the point across.
I like simple.
So it puts the point across. So now what happens is when this income or this GDP starts falling, that means we are earning less than what we were doing before.
Right.
And if that happens for 2 quarters in a row, then we are officially in a recession.
Okay.
But even before that, let me get into some technicals here because I think they're essential, is that we could get into a very dangerous situation, which is called stagflation. Right. What is stagflation? High inflation, as you were saying. And now for at least the past year, we have had inflation that is above what the regulators are comfortable with, which is their comfort limit is 2%. And we have been around that level for the last year. And growth is slowing, which means we can see a period of high inflation, low growth, which is called stagflation, which is good for no one.
No.
Right? Because how do we get out of that situation? How do people survive and thrive?
Yeah.
After that. So that is the big question. Thankfully, we are not quite there yet. So we still have a lot of hope.
Okay.
Yes.
We're not officially in a recession yet.
No, thankfully not.
Thankfully not. So how long do you think this could go on for? What do you think? I mean, the governments are making some steps to help people with the cost of living, especially those that are households earning under certain thresholds.
Right.
But even those who are higher earners, they're still feeling it. They're having to spend less in certain areas, but they're still comfortable.
Yes.
So how long could this go on for? And do you think the measures that the government are putting in could help?
I think there is definitely room for optimism. I'm always optimistic. And if we look at past history of even periods that have seen high inflation, very low growth, we have always come out of those periods. And I am very convinced that sooner or later we will too. And there are some very good reasons to believe in that. So if I look at Bank of England's own forecasts, it actually expects in another couple of years inflation to be back at 2%.
Yeah.
By next year, it's already going to be half of where it is now.
Right.
So we have, there is, if that is, these are the projections. I mean, we might not be there
by the 1st of January, but
yes. Yeah. But over time, we should be able to get there. And also on the ground, we are seeing some improvements. So China supply chains, for instance, they have already started
improving,
restarted, and that should ease a fair bit of pressure. Oil production is increasing. So these are two big factors. The third big reason was, of course, the Russia-Ukraine war. We don't know how long that lasts.
No.
But also, as much as we would like it to end yesterday, the fact of the matter is that the world will find its way around the challenges posed at an economic level by them. Right? So that should also ease some of the concerns.
So do you think that, to maybe, I mean, they're talking about by the end of the first quarter of next year, that once we're out of sort of the worst of the winter, so by March kind of next year, that things should start to ease off? Is that what you're sort of saying, roughly, maybe?
I think next year, this time, we could be looking at a far more improved economic situation. If all goes well. But that said, there are still risks. We don't know what the pandemic is going to do next.
Right.
Of course, we are all triple jabbed by now, but with the kind of variants that come up, we don't know. Really.
We don't know if the things could get, Russia is still producing oil, and I know that Europe are still taking that oil. I mean, that if they cut that off at all right now, we still can't replace all of that. And prices of oil has slightly dropped, although you don't see that on the forecourt yet. Hopefully you'll start to see that over the coming months. But at home, gas and electric, we're expecting prices to go up again in October, because obviously that's the next review point, and the costs since the last increase have increased even more. So I think people are going to have a really difficult winter in some examples. And I know there's actually quite a lot of business owners now where people are making cutbacks. Some business owners are finding that people aren't buying as much because they've had to make other cutbacks elsewhere. So it's, I think for a lot of people, how long is this cost of living crisis going to last? We could roll into a sort of a on paper recession, but it's not, to me, it doesn't feel like a normal recession. And when we was in the pandemic, you saw the press, oh, we're in a recession. And I used to get really frustrated because we weren't in a recession, we were in a global pandemic. Whereas so this year we could on paper slip into one, but would you agree it wouldn't be like in normal circumstances, that normally in a normal recession, if there is such a thing, because each recession does seem to be quite different, but they don't last, they maybe last, you're in it for a couple of years, it takes a couple of years for it to even back out. But really what you've described is actually, if we do fall into one officially, actually we could be out of it as quickly as we've come into it. So within a sort of a 12-18 months period, we could be in it and back out again.
Yes. So I think I liked what you were saying about the kind of time period we are in. It is anything but normal. It has not been normal for the last couple of years. It is extremely atypical, right? Because the pandemic is something that nobody that I know has ever seen in their lives.
No.
And that has had such a ripple effect on everything, and it continues to do so. And we are actually still facing the aftermath of the pandemic for most parts. I think that's the way to look at it. This is not driven by the regular, what we call market cycle, right? Where you have a period of growth followed by a period of recession followed by growth again, that kind of circular cycle. We are actually in a very atypical environment. But again, historically, we have come out of very, very atypical situations as well. I mean, the 2 world wars happened, for instance, and economies still thrived after that. So actually we can, if it's not too debatable, we can look at the pandemic as a very silent war against people's lives.
Yeah, I get that. Yeah.
Yeah.
I mean,
So,
yeah, sorry, go on. What was you going to say?
so my point is that I don't think for that reason, just because we have not encountered something similar before, I don't think we should feel too pessimistic. I think we have a lot of still we have a lot of resilience. Like for instance, again, coming back to inflation numbers. Now let me get into a little bit of technicality. Typically, we look at what is called a year-on-year number, which is where is the price index for now compared to what was the price level a year ago.
Yeah.
And we look at it every month. Now, if you look at the increase from 1 month to the other, so the latest data we have is for May. If we look at how much prices have increased from April, we are actually seeing that the price increase, the level of price increase has actually fallen.
Okay, that's really promising.
That is actually fallen. Now, there are also many other technicalities to it, which might just be the reason for it. But at the same time, if I just look at the headline data, it's a bit encouraging.
Yeah, that's really good. I can see that. Yeah.
Right. So it could mean that some of the measures that have been put in place to bring prices down are actually working.
Yeah.
Right. And also, if you look at the GDP numbers again, the economy is actually still growing quarterly. Right. So we are not gloom and doom right now.
No.
We can still turn things around. Right. Of course, interest rates is one thing that has to rise. It has to stay elevated. Government has to continue to provide support.
Yeah.
Especially for families that are really struggling with high energy bills. Mm-hmm. That is, without that, things will get challenging. And we have to keep moving in the right direction as far as the pandemic is concerned. Otherwise, we could fall back into difficult territory.
So we're on a tight line, but you're optimistic.
Yes, absolutely.
And I'd love to come back just to one of the points you made. I recently looked at a graph and I shared it in one of my newsletters, actually, to one of my regulated side of my business, and it had excuse me, had a graph of bull and bear markets in going back 100 years to the First World War and the Second World War. The 2 or 3 recessions that we had in that period of time. And I'd like you to describe those cyclical market changes that we typically have. But what I found really interesting is that the pandemic, the drop that we had in the pandemic in this graph was, at the time it felt major, but actually on this graph it was quite minor compared to World War II.
Yes.
But even after World War II, the bounce back was incredible, as you described.
Yes.
But then in the 08 and the 80s, the market, so we're talking about actual stock market investing, excuse me, was really good. So people were suffering. There was like people losing their jobs, high unemployment, low income, people really struggling, but the market still did actually really well. So could you just talk a little bit about that? About
why markets would do even while the larger public can struggle?
Yeah. Okay.
So I think the very interesting thing that happened during the pandemic is because a lot of people were working from home, and they probably had a lot of time at hand, much more. I know I did, because there was just no going out. So you could research stocks more. So stock market investing activity actually increased significantly. And that was also because people were saving more than ever. Mm-hmm. So UK households saved the most they have in history, at least as a percentage of their incomes. And where does all that saving goes? It goes into investments.
Right.
Right. So That is partly what drove
that. But what about back in the 80s, for example, when the markets were, I mean, I don't know if you know the data, because obviously, you know, you might have been in India studying back then. I don't know how old you are. But I just find it fascinating that the stock market returns were really healthy, but we were officially in a recession.
So sometimes, stock markets can also be driven by pure liquidity. Right? Which is just money in the market. So for instance, if interest rates are really low, there can be borrowings made to invest in the stock markets. And also stock markets are driven by institutional investors significantly, right? Your big funds. And they might still be healthy, even if the economy is not in the healthy place. Right. So the stock markets and economy tend to be linked over time, but at certain points of times, you can find that they are completely unlinked. And you just don't know what's happening. So I will give you an example again from the pandemic. So real estate stocks, for instance, for a while, they did very well during the pandemic because there were policy announcements that the stamp duty holiday, for instance, that led to a spurt in buying activity. Now, the housing market is a market that is very, very linked to the economy normally. But in this case, there was just complete delinking because people suddenly, first, they were saving more. Secondly, there was a stamp duty holiday. So they thought, okay, let's just invest in houses now, right? Let's buy and sell houses. And typically in a recession, what would happen, or in a slowdown, what would happen is that people will have lesser money. They would be putting off expensive purchases for a later date. House prices would actually come down. Yeah. Right. So this was a very atypical situation. Yeah.
Yeah, I saw what you're saying. It's interesting. Yes. Excuse me. Just had a mid-coughing fit, so I just thought I'd pause there for a second.
Right.
I always have these little colds now and again, and then I have a podcast, and I think I'm still gonna do it. I'm not gonna give up just because I've got a cold and my voice might go. I can press pause, so it's all good. I've really enjoyed what you've shared with us today. Thank you so much. I think it's really important that my listeners and people like that follow me on social media, that where we can, we share our knowledge so that more people can get informed, because for anybody, regardless of what their financial situation is, but especially for those that are struggling, because if you don't understand what's actually going on around us, and you're listening to people that maybe were alive in the recession and back in the 80s, for example, not necessarily of 08 in the UK, but their example and their experience of it could be 10 times different from another person, but also because you're then in a situation where you're feeding off that negativity and you're thinking it's going to be the same kind of outcome or we're going to go into recession of what it would look like back then. And it's really not the case, because, well, one, we've evolved as a society a huge amount. We're talking, the 80s were 40 odd years ago. It was 40 years ago. A lot has changed in that time. And also the situation that we're in is, like you've described, it's not that economical sort of shift that happens every 10 to 20 years. This is off a ripple effect off the back of the pandemic and a couple of other things that have then hit it at the same time.
Yes.
So I think you're right to say optimistic, and I like the fact that you are. But still, we need to, the government have got a very tricky job right now to balance that and keep us on track.
Yes, absolutely. There are always risks, but there is always room to feel hopeful.
Definitely. And like you described previously, even if there is a period of, a year or two where there is a little turmoil, it always bounces back. It always comes back on top, and generally inflation and things grow. We want businesses to grow. We want inflation to grow. That's just how money makes the world go round. Yes. And that's just part of how it works, right?
Yes, absolutely.
Lovely. Is there any finishing tips or lasting thoughts you want to leave anybody from today?
Well, I'd only like to say that we are living through a hard time. We know that, and some more than others. But sometimes it can appear that it will go on forever, but we should keep the faith.
Yeah,
It's
keep
a hard time.
positive.
It's a hard time. I get that feedback from many people I talk to, but we have to keep calm and carry on.
I love that. Well, I've really enjoyed you being on today, Manika, and maybe you can come back in a couple of months' time or so and talk about what's happened in the meantime. Maybe we can do a review at the end of the year and see how things are for 2023.
All right.
Well, thank you for joining us today. I will say goodbye from me and Manika, and thank you for joining us.
Okay, thank you. Thank you for having me.